Welcome to the BlockNation Crypto Podcast, the most entertaining crypto podcast in the entire industry. My name is Drew Griffin, and in this show, I break down ICO investing, crypto investing, why most blockchain projects are horrific investments, what we can do as a crypto community, and how you can structure new ICOs to reward the most important person, the investor. Please note that nothing on this show is investment advice. Everything I present is my own opinion, and you should always do your own research and contact a financial professional before making any sort of crypto investment. Like always, you shouldn't take investment advice from strangers over the internet. Make sure you subscribe to my channel. Make sure you check out my blog at crusader.com/BlockNation. Make sure you follow me on Twitter at Drew Griffin. Please leave me your comments, your questions, and any feedback you may have. If you disagree with anything that I have to say, I want to hear from you. I hope you enjoy. Thanks for listening. So Bitcoin is one of the best performing assets of 2019. Despite popular belief or people who don't understand Bitcoin or don't invest in the market and they dog it, it's been one of the best investments in 2019. So you can look at stocks, you can look at bonds, and you can see Bitcoin's really been outperforming them. And I think it's going to continue to do so over the next decade, over the next 20 years, because Bitcoin has real, true value. So stuff like Bitcoin, Ethereum, XLM, Stellar, stuff along that line, I think is a great investment. Although you can't take this show as investment advice, all that good stuff. I think it's going to be one of the big lead investments. The problem with it, most altcoins and other ICOs are complete garbage. Okay. And I say that not saying because the technology behind them doesn't have a true value or it can't be implemented worldwide and mass adopted. I just think the structure of the token inside the blockchain for an investor is a piss poor investment. And I'll explain why. Okay. So if you look at what an investment is. So if I invest in the stock market, okay, I'm buying equity in a company. That equity gives me ownership into that company. And most times as a stockholder, you can make decisions. You get a vote. You can, fire management, vote to fire management. And so you are empowered as a stockholder in that company, and that equity is backed by that company's bottom line. Okay, and eventually, as a stockholder, the price, if you're going to receive return on your capital, either the price is going to increase, the company is going to have a stock buyback, or they're going to pay you a dividend. Okay, and this is what really separates stock investing from crypto investing. Okay, so before we jump into crypto investing, let's take a look at the bond market. If you buy a company bond, okay, you're guaranteed to have return on that money because that company has to pay you yield on that bond. And if that company goes bankrupt, people who are the bondholders get first dibs when the company's liquidated. Okay, so that's stock and bond investing in a nutshell. It has true value behind owning that stock or behind owning that bond. Crypto is completely different. Okay, not only is there no laws that protect the crypto investor, they don't have any equity in the company. They don't have any voting power besides certain blockchains that set up voting for token holders, but you're not guaranteed any assets if the company goes bankrupt and they have to liquidate, like people who hold bonds. Okay, so as a token holder, you're really, you're investing in something and it doesn't mean anything. If the company, ups and leaves, you're screwed. You can sue them and take them to court. Good luck with that. Okay, that's happening with a lot of companies, and before anyone gets paid out, if they even get paid out, that's going to be years and years on down the road. So what makes crypto investments a piss poor investment at the moment, besides your really good ones? I already mentioned what I think are the good ones. I have some other ones I do believe in, and a lot of them it's because they pay a dividend. But what makes them a poor investment is that token is you're hoping that it has some sort of use in the blockchain system, and its usage is going to make it increase in value. Okay, and so as a crypto investor, if it's not Bitcoin, if it's not Ethereum, a lot of these networks aren't getting a lot of usage. Okay, and so you have some coins that have really proven the utility model. I think Ethereum one at the moment. I think Binance Coin is one, but that's it. Because the main reason companies use ICOs is they want to raise money to fund their operations. The bad thing about ICOs is they're force feeding this investment idea back to the investor and just hoping that their token's going to get used and their model that they set up is somehow going to return capital to the investor. And that's why a lot of them have been a bad investment beyond just, outrageous speculation and people just dumping in tremendous amounts of money into it and making the price jack up. So there are ways I think you can structure an ICO that gives the investor a good stake at the money and really puts them first when it comes to returning capital. And I think this is the number one thing ICOs and blockchain companies really screwed up, is they didn't put the investor first. Okay, when you accept investor money, they are number one, in my opinion. And I'm not the only one who thinks this. There's a lot of very smart people out there who believe that, and really where I got this idea from, okay? And one of the top people out there that has this philosophy is Kevin O'Leary, Mr. Wonderful from the Shark Tank. And he talks about this, in his book, throughout his different lectures and his different TV shows, is he says, investors come first. And I totally agree with that. Because as an investor, I'm giving you my hard-earned capital for the idea that you're going to put that money to good use and you're going to return me money from that capital. As an investor, I don't give you money just because I want to see your company start up. That's a donation, okay? And there's a big difference between me donating you money and me investing money. I'm going to donate money to the poor and needy who are actually going to use it to put food on their table and provide for their families. I'm going to invest money in a company so that you can take that capital, you can build your business, and then you can return me yield on the capital I put in. A lot of blockchain companies, they didn't put investor first. They took the money, they pissed it away, and the bear market hit, and a lot of them had to go under. A lot of them had to, get rid of all their staff, and they left investors out to dry. And I'm not talking about the ones that were scams. I'm talking about the ones that were legitimately, trying to start a business, but they didn't put the investor first. Okay, so I think you can set up a token sale so that the investor is put first, and that you can take that money, you can put that money into work, and the investor will have a stake at the profits from putting that capital to work. Now, if it doesn't just work out, that's understandable, because sometimes in business, with the economy, with politics, it just doesn't work out. Okay, that's why most investments don't return money. Most investments lose capital. If you look at venture capitalists, the best ones are only returning like 20% capital from their investments. The other 80%, they end up losing money on. It's just that 20% brings them back so much capital. It makes it worth all the different investments they make. So I understand, sometimes your business fail, but I look at the structures of a lot of these token sales, and I can tell you immediately it's just not going to work. And I read a ton of white papers. I look at a ton of ICOs, IEOs coming out there. And the first thing I do after I read that white paper, I think to myself, is this token going to be valuable from it being used? And if I can't link the token and an increase of value together, it's not worth investing. I don't care how innovative your project is. I don't give a damn. If your token cannot raise value, if it cannot return investment to the investor, I think it's not worth investing in. And I think a lot of people, they get confused with that. They think, this token is going to solve this problem and it's going to bring me lots of money, but they're not looking at, okay, this token may solve that problem, but that doesn't mean it's going to increase the value of that token, especially when there's like 3 trillion of them in the market cap and they sold each ICO token for 25 cents. I mean, a lot of times if you just look at the financials behind these coins and stuff like that, you'll see that a lot of it's just complete dumpster juice. It's just garbage from what they're trying to put out there. So I think you can create an ICO that gives investors a stake at the profits made from that company. And I think you can keep your token. They don't have to buy a utility token that's going to be used on the platform. Now, there's only one downside of this. In America right now, my structure wouldn't fly because you'd be selling a security. And I have a whole nother podcast and I go on a tangent about the horrible investment laws in America because they're outrageous. And it's not just America, it's other countries out there. The investment laws are absolutely ludicrous. They were invented in the 30s and 40s, back before we even had computers, back before we had televisions, all that stuff. But I'm not going to go down that rant, okay? But that's a disclaimer. Now, people say, well, that's stupid because if it's not allowed in America, then it kind of ruins the point of ICOs. But if you look at any upcoming ICO and IEO, guess where they don't allow investors to come from? The United States, China, Britain, pretty much every developed country in the world. So it's like, hey, we're splitting hairs here because any ICO that's followed this old structure can't sell these tokens to people in this country anyways. So what's the argument? I actually have a legitimate process that you can create an ICO, get capital for the company, and give the investor a stake to the profits. Okay, so we're going to go over this one by one. So with an ICO, the main thing is have your blockchain and have that utility function for that blockchain separate from what the investor puts their money in. Okay, all the investor is doing is they're buying a smart contract token that gives them a right to the profits. Okay, so you issue out, let's say 100 of ABC token. Okay, this token has no utility. All this token does is it gives that investor a claim to your profit. Okay, so on your network, your platform, you have a completely different token that has a different usage. And so what happens when people use that platform network, they generate a transaction fee. Okay, that transaction fee is going to send some money back to the blockchain company. It's going to send a little bit of money to a smart contract pool that gives investors claim at that money. Okay, so the idea behind this is at any point in time, the investor can cash out of their investment, but they have an incentive to wait a longer period of time because the higher that pool of money, the more that pool of money accumulates, they'll have a higher stake to that claim. So each token represents a percentage to that pool of money that comes from that transaction fee. Excuse me. So let's say you issue out 100 ABC tokens. Every token gives you 1% claim to that pool in that smart contract. So let's say throughout your transaction fees, you rake in $100,000, okay, to that smart contract pool that investors have a stake in. Well, as an investor, if I own 10%, I can send over my tokens in a smart contract will initiate the whole process. So you're not reliant on the company. It's still a decentralized process. So I can cash out at any point in time. But as an investor, if I see this company's doing really well and this pool, the smart contract pool of money just keeps going up and up and up and up, since I own a percentage, not a fixed dollar amount, okay, I may want to hang on for a while, see how much this pool of money increases, and then at any point in time, I can cash out my tokens and use a percentage to receive that amount from that pool of money. It's basically like a stock, okay? So, I mean, it's nothing that the U.S. government will say, oh, yeah, y'all can do this flies, because the first thing you're going to say, hey, you're still in unregistered securities. But I think it's foolish that we can't have this system set up. We don't need to go through this crazy IPO process because we have so much stuff you can build in the code and algorithms that'll process all this stuff automatically and make sure it's secure and decentralized, that you don't need the third parties. I mean, that's the reason Bitcoin got invented, was it eliminated the need for a third-party clearinghouse. So we can create a type of fundraising that allows investors a stake at some sort of profits that blockchain pulls in. And as an ICO company, I don't have to force feed my token into, I don't have to force feed it as an investment, because that was a lot of the problems is these companies had this token. Well, the only way to incentivize investors is if I make it appear that the more usage that this token goes through in my network, it'll increase the value. When a lot of times, most blockchain companies, they don't need a utility token. Okay, they have a service or a product that they're just force feeding this token into, because that's the only way they could get investors to put in money, is to give them a claim at this token that's used on the network. All right, so my system is saying, hey, you don't even have to use a token. You don't even have to use anything. You can take your blockchain company, you can raise money, and all you're doing is you're guaranteeing that investor a stake at a certain percentage of the profits that we make from our blockchain service or product. And really, it doesn't even have to be a blockchain product. Okay, you can start an ICO for your company as long as you guarantee that a certain amount of money goes into this pool that the investors have a stake in. Okay, and I know the U.S. government will disagree with me on this, but I think this is the future of raising capital. I think the IPO process, it's dated. It really inhibits innovation because there's tremendous amounts of great ideas out there. People coming up with all these great innovative solutions. The problem is they lack capital, and the only way to be able to fundraise for capital, you got to spend a lot of money because you got to hire compliance people. You got to go through all these hoops and ladders and making sure this security is registered and getting it onto an exchange to be able to sell this IPO and having people underwrite it. And it's just a capital consuming process. And so it really inhibits people from creating innovative projects. Now, my system, I think the government could come in and they could set up a limit to the amount of money you could raise, maybe cap it at like $150,000. It doesn't have to get into the $1 million range. Just allow people to create a smart contract ICO and follow the techniques and procedures that I just laid out for you, but cap the amount that they can raise maybe at $150,000, $250,000, because that'll keep people from just getting greedy and raising $25 million and they'll never be able to return that money back to the investor. But $250,000 as a startup, you can really leapfrog your company and your products and your services. So I really think this is an easy way companies could raise capital. It's not going to be allowed in most countries, but token sales and ICOs aren't allowed in most countries unless you follow these super ridiculously outrageous structured SEC framework for token sales. And if you look at the framework for a token sale, I don't want to invest in the SEC's version of a token sale because that token has absolutely no value as an investor. Okay. And it's just, when I read that token sale guideline, I about fell out of my chair laughing at how stupid it was. If an ICO company, a blockchain company follows the SEC's guideline for an ICO, don't invest in it because it's fucking garbage. Okay. It's worthless. You'll never receive any money back from your investment. All right. It's absolutely ludicrous. Like I said, it was a joke when they put that out there. But my structure, I think, would be a great way for raising money. I really think as individuals, we need to push our government into changing these investment laws that were created in the 1930s before we had computers, before we had air conditioning, before we had refrigerators, before we had any type of innovative technology that we've come to love and grow to know and that we need. But no, that's kind of how our government rolls. We're going to roll with stuff called the Howey test that no one knows who Howey was, yet we follow these outrageous laws. Okay, so that's my way of making future ICOs valuable. It has nothing to do with creating utility value for the investor. It all has to do with giving the investor a stake at the profits based on the amount of initial coin offering tokens they hold. And then whatever the network tries to do with their blockchain, the investor really doesn't care about. They just want you to make a profit because that's where they're going to have a stake. And it'll give the investor motivation to hold for the long term, because if that pool of profits keeps increasing, they're going to have more money to be able to claim later down the road. Okay, so to me, it eliminates the pump and dump scheme. Because right now, as an ICO investor, once that thing hits the market, that's when its all-time high is going to shoot up. That's when you want to dump all your coins. And this happened a ton in 2018. All these ICOs that came out, they would skyrocket as soon as they hit the market. And initial investors would just dump all their coins on the suckers trying to jump in this late ICO. And if you look at a lot of the structure of ICOs, one thing I hate is they have like 4 or 5 seed rounds. They have 4 or 5 token sale rounds where the initial investor gets like an 80% discount on their coins. Okay, and what they're doing through that is they're creating their own price point without giving a real market evaluation. Because if I start my ICO at 80% off and I gradually increased it, well, the time it hits the market, it's going to be at whatever price I set. And that's where those initial investors that got it for 80% off dump all their coins, because at the moment they just made an 80% profit off their investment, because at the price they bought it and at the price that the last investors of the last round were paying for it. So I think that's one of the most tremendous things. Another thing I hate about ICO investments are airdrops. I freaking hate airdrops, okay? Because all you're doing is giving away tokens for free. And the only thing that happens when you give away free tokens is you lower the cost of your original tokens. You lower the value because no money has entered the market cap, yet you've increased the circulating supply. So it's just basic math. So that's one thing I can't stand about airdrops. The only airdrops I do like is if it's in the form of a dividend. Okay, so if I get paid an airdrop based off the amount of tokens I hold, and this is something TRX does with BitTorrent tokens. Okay, now they call it an airdrop. Some people call it staking. I call it a dividend. I like dividends. I'm a big investor in dividend stocks. Okay, I like investing in bonds because they pay a yield, especially bonds that pay a monthly yield. Okay, like I especially like investing in REIT ETFs because they pay out a monthly dividend. Okay, so I'm all about dividends. But if you're just dropping out an airdrop to just anybody that will accept it, and you're not bringing any money for those tokens, you just devalued your coin, and you really just gave a big FU to your investors who put their hard-earned capital into purchasing that coin that you're just giving out for free. Okay, so if you're an ICO company, if you're a blockchain company, you're trying to start airdrops, don't do it because you're screwing your investors. All right, and like I said, when you accept investor money, they're number one. They are number one. Okay, so as a crypto investor, make sure you be wary, okay, when you're looking at projects, when you're looking at ICOs. If you cannot put direct value from token to an increase in value, okay, don't invest in it. And I don't care if it's a good idea. I don't care if people say, oh, this is going to revolutionize the travel industry, which a lot of crappy ICOs try to do, create a travel industry coin. But I don't care how good the idea is. If you cannot connect token and value, don't invest in it. I promise you, all right? You won't return money. You will not return capital on your money. And if you don't know what to invest in, I'll give you 3 ones to look into. Like I say, this is not investment advice. Okay, don't take investment advice from strangers on the internet, including me. I don't care. Maybe one of the smartest people in this entire industry. Don't take random strangers' advice on the internet, especially when it comes to money. But if you really need 3 coins to look at that I think are valuable investments, in my own opinion, one's Bitcoin, one's Ethereum, and I would really give Binance Token a hard look. Okay, and I know that kind of contradicts everything I just said because Binance Token is basically a utility token. But that thing is going to explode over the next year. It's going to explode, and that's just my opinion. A lot of similarities to Ethereum in the ICO days of 2017. Now, I wouldn't say hold on Binance Token forever. I would say have an exit strategy with it, but I really foresee that token exploding. That's been our show. Let me know what you think about my ICO structure. If you want me to go in any more detail, make sure you leave me a comment, shoot me a DM, contact me in one form or fashion. Make sure you subscribe to this YouTube channel. The only way I can teach you new innovative things about the crypto markets if you subscribe. Follow me on Twitter @DrewGriffin. Make sure you check out our blog at crusader.com/BlockNation. And make sure you check out this show every single morning. I'm going to put out either a crypto news show or a crypto podcast. So make sure you're paying attention. Make sure you subscribe. Make sure you're listening. Let me know your comments. Let me know your questions. And thanks for listening. My name is Drew Griffin.